trend lines. Everybody's pretty familiar with trend lines, I think, if you've been around the trading world for any kind of time. All right, trend lines can show the current trend on a particular time frame and offer levels of support and resistance. Now, by drawing a line connecting swing lows in an uptrend and projecting it out into the future, we can get a good idea of where to find support as well as the speed of the overall trend. So it gives us a bit of a support and resistance factor, supply and demand factor, as well as a speed factor, so a timing type of a factor. And the same goes for a downtrend. However, we're drawing a line connecting the swing highs and projecting those out into the future. Now, in this program, we do not buy and sell breakouts. Okay, trend lines should be looked at as support and resistance zones. Many times what you'll see is price will come down and test the trend line. It'll even break a trend line and then create one of those candles we talked about, one of those reversal candles. Those can be really good levels to watch for divergence and to look for turns in the market. The other thing you'll see is sometimes price will actually break and close below a trend line, but the very next candle will pop right back up or right back down into within that trend line. Okay, so that's something that's very common in the market. We'll actually see divergence develop a lot around these types of trend lines, and obviously these work better on the higher degree time frames. They're stronger, more powerful, as with most technical indicators, and they work best when used in confluence with other support and resistance factors. Okay, so if you have a trend line that lines up with other price support and resistance, or with Fibonacci levels, or with a pivot point, it's even more powerful. Okay, so let's go ahead and take a look on a price chart of how we would draw a trend line and how we would use it for potential support and resistance. Now, here is a chart of the Euro USD, and this is the monthly chart, and this is actually a very recent example in the service, the Forex Mentor Daily Trade Plan. This was a level we were watching for potential support to come into the market. All right, so even when we had this really big decline in the euro dollar, we saw the US dollar just strengthening across the board, we were watching this area for a potential level of support and for a market reaction. As a matter of fact, I can show a chart here from that time period, and let me see if I can, there we go. This is actually the chart. You can see the date here on the top. This is from March the 8th. Okay, March the 8th. As we were approaching this line, you can see we had an equal legs extension. We also had this monthly trend line. And you can see the words over here. I'm showing the monthly chart here so we do not lose sight of the upcoming support level. That will be a key factor in how we view this pair in the medium term. Okay, so we knew we had the support level coming up. This is the same chart. We'll just draw this trend line again. Okay, and you'll see what I mean right here. This is on a monthly level, and see how price spiked through. Okay, so we came through. If you're selling breakouts of this trend line, okay, this might have caught you off guard. If you decided to sell that break, and then we had an immediate reversal and a bullish monthly candle that followed. Okay, that bullish railroad track candle. So remember, we're using trend lines as levels of supply and demand. Okay, nothing more. We're using them to look for places to find potential trading setups. And you can see the same thing here with this down cycle. Okay, if we draw a trend line here, we connected at that point this swing and this swing. And you can see the market traded through this trend line a bit before turning down. Okay, so this level was never broken, but it was a resistance zone. Then we created a bearish candle, and the market proceeded to the downside. Okay, but again, we use this as a level of resistance. Let's just see if there was a fib that lined up here as well, because looking at the retracement of this particular swing, Looks like we could have had a fib level right there, and we do. 62% Fibonacci retracement of this monthly decline. So we pulled back, price came right into this trend line, 62% fib, nice confluence level. Great place to look for a trading setup. Okay, so that's how we're going to use trend lines. Let me show you another quick example here on a shorter term time frame. Okay, this is actually the New Zealand dollar, Japanese yen. And we're pretty much in a downtrend here. So maybe you were looking to sell a break of a trend line. This is another one of those examples where look what happens here. Okay, this is what I was just talking about a few minutes ago. We're in a downtrend, 15-minute chart. You sold the breakout, okay, or you sold when this candle closed. This candle closed below the trend line, solid close. But look what happened with the very next candle. It did not move below that candle. It immediately reversed. Okay, this is a fake out. And you see this a lot in the market. And this is why we don't buy and sell breakouts. Okay, if you want to trade this type of pattern, once the trend line is broken, you want to put your entry below that candle. Okay, below the close of this candle. And I wouldn't just put it a pip or so below it. I'd probably put it about 5 pips below to look to enter into the market for a continuation to the downside. Okay, but one of the things we don't do is we won't have a sell stop here. We won't have a sell stop in place if price breaks through this trend line. Okay, folks, so just a couple of examples how we will use trend lines for this particular trading strategy. Now, there's other questions people might have. Do we draw it from the swing points? Do we draw it from the closes of the candles? And that's really up to you, the individual trader. When you really think about it and remember that we're looking at it as trading zones, that doesn't become as important. Normally, you want to see where the market, where it's getting the most touches. You want the trend line to get the most touches, and that tells you that the market is reacting to it. Okay, but we're not going to get too hung up on trend lines because we really, again, only use it for support and resistance and look for other trading setups in and around those supply and demand levels.